But silver, there is nothing available. And I think that's the interesting part about it. So yes, silver is being raided out of the COMEX, and it is going to deplete. And I think JP Morgan are doing their best to hang on to every single ounce.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And fortunately, it's the first week of the month again, which means I am joined by Andrew Maguire of Kinesis Money, also a whistleblower, a lot closer inside than just about anyone else I know for this Department of Justice investigation, and certainly a lot happening. So Andrew, pleasure to have you here as always, and looking forward to digging in. And how's everything going with you today?
Yeah, great. Well, look, it's always great to be with you. And I kind of like these monthly things, because what it does is it helps us to step back from the daily chart chatter. And, you know, we're all guilty of this. And you know, I get pinged every time gold or silver comes down by 3 ticks. You know, you have kind of like, you have to stand back and say, you know what, monthly, we can kind of now look through and answer a lot of questions as to what happened last time you and I were speaking. If you remember, gold for the very first time, spot gold broke through 2000, and basically, so you know, it gives us a chance to sort of, as I say, step back and distill the current action drivers and kind of connect the dots to put things into perspective. And I know that's where most of my questions come from. This is what most of my emails ask me. Apologies, I think I'm gonna shut this off.
Is that Jamie Dimon calling? Or maybe is it the CFTC? They finally want to know about the evidence you gave them 10 years ago.
Now that's plausible. That's plausible. But anyway, no, I think, well, we can kind of talk about that as well. And so, you know, we'll talk about whatever you want to talk about. But basically, I think the questions that come, because what we're dealing with here is people look at the markets. They look at the stock market heading to all-time highs. We see, you know, risk being thrown to the side as if it didn't exist. And we look at the gold and silver, and you clearly, the action, you cannot say a kind word to say it would be counterintuitive to what should be happening. So really, I think, you know, just sort of dealing with that question, it's freely admitted that all markets are heavily intervened with, and gold and silver are competing as money in the foreign exchange crosses. Now, these gold and silver crosses are the major focus of central planners who are being called to account by the increase in demand for gold and silver priced too cheaply against the dollar. So we tend to get these interventions. Now, but it's important to remember, because a lot of people that we talk to are US-centric, are forbidden from trading over-the-counter gold, which is basically where the biggest market is, 10 times larger than the COMEX. It's where prices are set. Ultimately, it's where the reset will occur. And so really, it's important to remember that, you know, although US traders are siloed into the COMEX and are forbidden from trading the bigger markets, unlike all commodities trading on the COMEX, gold is traded as a foreign exchange cross, which is freely convertible to all other foreign exchange currencies, i.e. you're long one, you're short the other. So when we see the price of gold or silver rise, what we're really evidencing is the US dollar price falling against gold or silver. You're long one, you're short the other. But it's happening alongside the entire basket of all other fiat currencies. So exchanging these competitively debasing fiat currencies for gold or silver is clearly the best option to preserve your wealth from any other further currency debasement. So this spot, or let's call it foreign exchange gold and silver demand, is, as I say, 10 times larger than what is traded in the captive COMEX casino. Ultimately, it seeks physical delivery, which is not what the COMEX used to be, but we can talk about how that is evolving to a delivery market. But ultimately, these positions are seeking physical delivery, which in turn draws from a finite amount of real bullion, which is immediately deliverable. But unlike all other foreign exchange crosses, bullion cannot be printed to meet demand. So to manage the foreign exchange crosses, every 2 weeks, central planners meet in Basel, Switzerland, to agree, amongst other things, currency interventions, which just include gold. Now, that's the only part that's ever denied. However, interestingly, of course, the Bank of International Settlements has its own gold desk run by Benoit Gilson, who declined our lunch appointment last time I went. But central planners fully admit to regularly intervening in the various foreign exchange crosses. Now, where you're, as I say, you're long one, you're short the other. And that determines your benchmark price. We see it every day. That's what the euro is priced at today versus the dollar. That's what the yen is priced at. It's not rocket science, but because gold can't be printed, central planners have to carefully manage the retreat of the US dollar against deliverable gold and silver currencies. So to facilitate this, the BIS has this gold trading desk based in-house. Now, we can look at the BIS closer in a minute because there's some actual very interesting information relating to the reset. But let's look at the effect of currency intervention in foreign exchange gold, because this actually answers a lot of questions. Now, official currency interventions, as we say, fully admitted, accepted as part of the course. Many central planners, central bankers have admitted it in the past, where they admittedly step in, or after a G7 or G20 meeting or whatever it is, they talk about, well, who is going to competitively debase their currency against each other at what rate. And essentially that's where, this is essentially where the entire system collapses. But what they do is they take FX gold. If they take the FX price of gold too low, it dries up the offer to sell bullion. So offsetting this effect, 100% relies on wrong footing as many paper chasing speculators as possible, because they're the only source of adding supply. And there's no way that if you're trying to position yourself long as a central banker, and we fully acknowledge, and there's reports of central banks going long, sovereigns going long, and we also know that an ultimate reset has to occur in the foreign exchange market. So of course, these guys are not going long. What they're looking to do is to draw in supply from the speculators, captive in the COMEX casino. Now, but rigging prices below equitable supply-demand fundamentals, what it does is further tighten up what little real bullion is on offer at market. And this is talking about as a wholesaler here. And it's immediately recognized by the entire wholesale market participants who, just like today, competitively jump in and lock in cheap spot index ounces and tons at heavily unsustainable foreign exchange gold prices. So it's this equation that determines the price support point. So when what we have now is really a lot of fiat chasing what tiny little bullion is actually on offer, which further tightens supply, and the offer to sell bullion rises to meet the demand. So in other words, it's really summed up how much wrong-footed non-delivery spec supply can be chart painted with insiders taking the long side of each sale against competitive real market forces who recognize gold and silver bullion is deeply undervalued and are locking in prices for physical delivery. One thing is clear, and I think the cause for much misinterpretation and wrong footing is the more intelligent the mind, it makes it much more difficult to make sense of a market where the action has intermittent bouts of extremely counterintuitive action, just like we're seeing today. And we're talking about action that's blatantly counterintuitive to all the fundamental supply demand drivers. And I'm referring to the action we've just experienced in the last 2 weeks of August, first 2 days of September. And I'm sure you've got many clients who'd love to be able to pick up the phone and ask you, can we take delivery of silver at spot, Chris? I don't know what your answer would be there.
I mean, you can't really do that with, I mean, it's interesting. People look at the COMEX as the spot price, but I think we even talked about it a couple months ago, whether we're going to find out if there's delivery or else at some point, the spot price becomes a little bit irrelevant. I mean, certainly for anyone buying retail, they're paying plenty over spot. So,
yeah. And even from a wholesale market perspective, I mean, we're looking at, what should be a T plus a half delivery. Now, the wholesale market, that's what we used to pay, maybe between 2 to 20 cents over per ounce on a wholesale bars. It would be T plus a half. We'd have it delivered in our vault and we'd have it delivered to us within half a day. Now, we're lucky to have, really, if we want size, it's T plus 90. I mean, that we're already booking, paying for, i.e. spot indexing, locking in the price of spot for silver, that is actually not going to be delivered to us until January, February, and March. I mean, that's ludicrous. That really tells us how underpriced this market is. And it's really, this is where the problem comes. I mean, I think this is evident to everyone but the speculative COMEX paper-centric traders. It's these speculative paper traders who provided the ignition fuel for officials just through August and today. But officials are doing this, and they're doing it more like by bid pulling at strategic points than going short. But essentially, they're not ready for gold to hit the $2,500 and $35 revaluation trigger points. Now, the current action really is just an attempt to simply slow the ascent of an unstoppable revaluation of gold versus the dollar. Now, the consensus of some of the brightest minds in the industry is that 2,500 and 35 silver are still the current trigger points. And I'm talking about some of the major trading desks here. And we're talking about some of the major trading desks who are buying today. And so really, that's the level that really is established as the price revaluation, where it'll have to be squared, basically. And we've discussed this kind of counterintuitive action before, but when the casino holds the financing book on enough speculators, which is i.e. a margin account, what people call a margin account, but essentially you're sitting on the book of your financer who is looking at your margin account and says, right, okay, well, hang on, we've got an aggregated level here. If we flush this level, and after all, the house has enough position concentration to do that, it's easy at that point there, once we know that, it's easy to net out the pain points of the naked longs versus those real no-stop hedgers who are coming in. And what it does is rinse out the fluff, but they're very careful not to hand the advantage to competitive buyers looking to buy cheap ounces for delivery. So really, what we're saying is, look, it's no secret that the COMEX is already, we know it's a 95%, probably 98% algo-driven market, but it's the primary HFT bots, the high frequency trading bots that are controlled by the house that influence the agnostic neutral algos seeking to simply take a tick either side of the market, which is a lot of what the action we see, except for when you see, like yesterday in silver, for example, what do you see? You see the pit close, the thinnest access market, and then suddenly 6,500 contracts go on sale in the thinnest market moment. Now, come on. I mean, it's a no-brainer. This is actually so obvious. So really what they're doing there is they're really just weighing up, the large institutional COMEX long positions. What they're doing is they're hedging a rising, ballooning, overvalued stock market. And so you've got to separate these real hedgers that are ballooning, that are hedging this overvalued stock market, and also legitimate physical hedgers. And what you do is you've got to balance that up against the flows of plain vanilla speculators who just recently been chasing a parabolic short squeeze higher. And these speculative momentum-driven positions, we know they have visible stops. They're heavily margined, probably to the limit, and which really sets them up to be targeted by officials seeking to slow the rise in GC and SI and gold and silver futures. So as we discussed last time, Chris, these sort of raids are not random. It's carefully calculated of just how much short cover that can be rinsed out versus their exposure to T+2 delivery demands, extending now to T+90 delivery demands. So obviously we have to remember what's on the other side of these targeted COMEX speculators. There are delivery obligations accruing in this larger over-the-counter spot gold delivery hopper, which is so full it's teetering. Now, essentially, they're undeliverable because they're not available today. So all that you have left for you to do is to lock in the spot price in the FX markets and wait for delivery. And really, I mean, look, we've got stocks testing all-time highs into risky conditions today. I mean, this must have everyone puzzled. I mean, we do have some risk-on related hedging flows flowing into gold and silver futures, but which makes it a little more difficult to get the kind of downside traction that used to be on the cards. But you know what? Even, this $6 long stock rinse since we spoke in SI, the $215 long stock rinse in gold, call it gold in GC, should we say? It looks dramatic. What's this? What happened in August looks dramatic. But all it served to actually do is rinse out the speculators. This is the fluff who we know will never have any intention of ever taking delivery and have very easily visible stops. So what I'm saying is, with the maximum gap already closed, insiders and the strong hands are loading up long spot gold for delivery and silver, and it's galvanizing a higher unrinsable support to build upon. So really, that's kind of where we are now. And I hope that kind of brings in the other side of the equation to people who are just focused on futures and see it as a dot on a screen that could go to zero, but really it can't, is what we're saying.
Yeah, and it's interesting. You also mentioned in there the deliveries. I know that's a question a lot of people have because we see these record delivery amounts. I guess gold didn't set an actual record. It came close to matching the previous record. Also, I think it was now 2 months ago when we saw JP Morgan deliver 30 million ounces. But is any metal, are we still just, I don't even know if we're moving it over the imaginary line or just like changing the Excel spreadsheet of who owns it. But I mean, we see these delivery amounts. Is metal actually leaving and being delivered, or what do you know about that?
Right. Well, as far as JP Morgan is concerned, and obviously you've got stats there and you track stats every day. I think we saw them take a delivery of another big tranche yesterday, I believe. Obviously we all track these delivery receipts but is it physical? Well, I'll tell you what is physical is that the COMEX, we've always viewed the COMEX as a non-delivery market. And so really, but at this point here, you have to understand from a wholesale market perspective, if we cannot get any 1,000 ounce bars, and all the 1,000 ounce bars have been shipped from Switzerland to the COMEX into their vaults, and we can't get this silver anywhere else, where do you think we're going to get it? And this is a side of the equation which is really not being seen or really understood yet. This silver is actually being shipped back, and it's actually turning into the only place to get physical bullion within T plus, as long as it takes to put it on a plane. And that's exactly what's going on right now. So they kind of shot themselves in the foot. And I think silver's a perfect example. The gold market is very, very opaque. And, We see the LBMA doing deals with the casino, as we say, making bars deliverable in London and still being a part of the COMEX delivery system. But silver, there is nothing available. And I think that's the interesting part about it. So yes, silver is being raided out of the COMEX and it is going to deplete. And I think JP Morgan are doing their best to hang on to every single ounce. I don't think they've sold a single ounce. Now, interestingly, looking at, again, we drill down into the weeds sometimes, but looking at the September contract, which has a 30-day window to deliver, as you know, which makes it a joke. I mean, basically, if you were short and you need to deliver and you're expected to deliver, why wouldn't you deliver day one? Why would you incur the cost of holding all of that silver for that whole period of time? It would be a lot cheaper to deliver it. Well, obviously, this silver, which is still undelivered and is being traded today, do you know that into the dip today, there was a 48-cent contango in September silver? I mean, that's wild. Then 3 minutes later, it goes into actual backwardation. Now, you're talking about a broken market here, completely broken. But if you're someone like JP Morgan and you see an opportunity, a contango of 48 cents in a contract that you physically have the long side of, you're sitting on this bullion ready for delivery, what you just can do now, you can sell that into the market and buy it back at spot. And that's exactly, we kind of talked about this before. That's what's going on. And is it illegal? Position concentration is illegal. But I think these guys are doing it very stealthily. They're playing by the rules. There are no rules in the unallocated market, but they're certainly, what they're doing is they're the only people left to trade these EFPs essentially, and the only people that can take advantage. You have to be sitting on that physical to do that. Otherwise, it's too risky.
So that was part one of this month's interview with Andrew Maguire. You're going to want to hear part two, where he digs into the Justice Department, shares what he knows about what's going on there. So hit the subscription button and the notification bell so you will be posted as soon as that is released, and I will see you then.